Hi Rahul, good to have you back. We are back again with another episode of Mind Over Markets. So much happening in the markets. Tell me what's happening. Why this sudden bout of volatility? What's causing all this?
There are these mega trends in the world India is benefiting from,
Could look a tad expensive.
and that's also very, very powerful.
Hi Rahul, good to have you back. We are back again with another episode of Mind Over Markets. How are you doing?
Very well, interesting times as always, and it's going to get more interesting.
So much happening in the markets. Tell me what's happening. Why this sudden bout of volatility? What's causing all this?
I think it's a culmination of last 2 years of what we see as a very thematic driven market. What we are now seeing is a normalization of that. So I don't see a big panic or a big correction, so to say, but I do see that there is a big normalization of that thematic driven market. And we are going towards a more bottom up, more rational kind of a market where even within the sectors you like, or even within the segments you like, you may have to be very, very stock specific, very, very bottom up, which is a good phase of the market, I would say, maybe over the next 12 to 24 months. So I think it's a healthy, I would say, healthy normalization.
But given the fact that Rahul, we've seen the markets rally for the last 3-4 years almost tirelessly, and the fact that markets could look a tad expensive, but not all stocks are expensive. In that kind of a setup, while most stocks have also moved up, from here on, what gives the kind of bottom-up stocks that you mentioned right to win?
So I think clearly there are companies which are expanding their competitive advantage in the marketplace, in the product or services in which they are in. And how you expand their competitive advantage is through small innovations, big innovations, continuous improvements in your product delivery, process delivery, services. And those are the companies which are going to gain market share, and therefore they are the companies which a portfolio should have, rather than a top-down approach where you could buy any power stock, any defense stock, any railway stock, and you would have made money in the last 24 months. I think those days are over, and it'll come down to which among these companies, even in the sectors I mentioned, are the companies which are expanding their competitive advantage, or basically improving their moat, or let's say capitalizing on their moat and going further than what they are currently doing. I think that's really and the good thing is that the economy and the various sectors are at a stage where the opportunity is there for these companies to showcase their abilities. So you are seeing so many things happening on renewables, so many things happening on manufacturing. There are so many tailwinds in energy transition. There are tailwinds in pharma, there are tailwinds in IT. So many new things happening at a very, very top-down level or a generic level, that companies who are ahead in the curve in capitalizing on all those 4 or 5 trends would be the ones who will create value. Even if they are trading at higher multiples, they will probably continue to trade at higher multiples.
That brings me to the new fund that we are coming up with, which is the Tata India Innovation Fund. You spoke about companies which will innovate and on product, process, or business models. But if you can talk specifically about how does one widen and deepen their moat that you spoke about? What are the ways in which companies widen, deepen their moats? Any specific examples? Not stock specific, but if you can give us some texture, I think that would help.
Yeah, there are various examples. For example, in the case of products, let's say, or manufacturing, there are companies which have changed themselves from being very IC centric to EV centric in terms of their ability to service the OEMs on the components which they were making. Good stories there, good examples there. In terms of services, there are companies which have obviously built on their moat and built adjacent businesses. Quick commerce is a great example of that, going from food delivery and then not staying at quick commerce and probably going even further and expanding quick commerce itself, the scope of quick commerce. The third category of business models, again, some very good examples there of companies which were earlier in the legacy fossil fuel based power generation, transitioning very, very actively and very proactively towards green energy. So there are these examples. There are companies, in fact, which were traditionally in one part of the auto market going into a different part of the automobile market and making a huge success out of it. So there are companies which are leapfrogging their traditional positioning and taking advantage of the stuff which I mentioned is happening today in the market, which is energy transition, EVs, manufacturing revival in India, pharma and IT through artificial intelligence. I think it's still panning out. Artificial intelligence is probably still early days, but there would be companies in India which will be early to capitalize on that opportunity as well. So there are these mega trends in the world which India is benefiting from, and within that, which companies would change their, as you mentioned, products model, services model, and business model itself would be the ones where you can create material alpha.
Understood. But does it always have to be the big aha moment in terms of innovation, or are there more mouth-sized bites of innovation that companies kind of slowly kind of morph into? How does that really work?
Yeah, I think the big moments or big discoveries, if it happens and if you're able to catch that at a small scale, well and good. But most of the examples of innovation in India would be comprising either incremental improvements or some breakthrough improvement, like for example quick commerce is one such. EVs and companies which have capitalized on that EV boom come close to that breakthrough innovation, especially for companies which were not present in passenger vehicles at all. So those would come close to what we call it as breakthrough innovation. But otherwise, it's going to be incremental innovation, and that's also very, very powerful. I mean, most of the value which gets created is when you buy a company for its management and the ability of the management to expand its moat, and you see it play out. It could be through adjacent businesses, more acquisitions, bolt-on acquisitions, transforming their business. And that's the beauty of incremental innovation. It can also lead to significant alpha without it sounding like a big aha moment.
But in terms of innovation fund, when we use such a phrase, it gives a very thematic kind of a feeling to the investor. Any thoughts on is it a very thematic, a narrow theme that one is playing, or is it spread out? How do you look at this fund, and how should investors who want to look at it consider this as a thematic fund, looking at a narrow slice through the innovation lens, or is it more diversified, cutting across sectors, segments, and so on?
Yeah, good question actually, because it is not a theme. There's a difference between thematic and sectoral. So sectoral funds or sectoral themes, you will have to be very careful in terms of what stage of the cycle that sector is in terms of recommending an entry or an exit from that fund. An innovation fund is that way an evergreen kind of a theme, and it's not sectoral specific. It's not sector specific. It will be cutting across sectors. Of course, there are certain sectors which will find it very difficult to enter this fund, where innovation is just not right now visible or does not look feasible, like real estate or construction or cement or some such sectors where you will see improvements on the cost management, etc. But you really very difficult to see real innovation. So apart from that, it will be cutting across multiple sectors. So to that extent, you have to worry less about individual sector fortunes deciding the returns of this fund. It will be more dependent on the bottom-up selection of stocks based on the innovation theme, which will drive the returns and the alpha from this. And therefore, as I mentioned, this is a more evergreen kind of a category, more evergreen kind of a thematic category as against a sectoral fund.
Understood. Any no-go areas or sectors or categories in the fund?
So, as I said, there are 2-3 sectors where we see potentially less scope for innovation. Of course, in future, things can change. But if you look at traditional power equipment only dependent on fossil fuel, if you look at traditional oil and gas companies, if you look at traditional cement or real estate or construction companies, they keep improving their abilities, but to visualize them making incremental innovation or breakthrough innovation at this point of time looks difficult. Never say never, but these are the few areas where we see less less scope for innovation. So it'll be really hard for some of these companies to be part of this portfolio.
Super. So I'm just kind of paraphrasing, what you mentioned, which is to say that looking at bottom-up companies which are trying to develop or build and fortify their moats by growing deeper, wider through incremental or breakthrough innovation, cutting across various sectors, and where we believe this gives them the right to win. So interesting theme, Rahul. And the fund opens for subscription on 11th of November. If you think there is merit, you could look at this fund in your portfolio. That's a wrap on the episode. Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.